G'day, fools. I'm Scott Phillips, the Motley Fool's Chief Investment Officer here in Australia, and welcome to another Motley Fool Stocks in Focus video, where we take a look at some of the companies on the ASX that you might want to know about for one reason or another, widely held in the news, just exciting. If they're businesses that we think you might like, this is what this segment is about, bringing you our views and views on those companies. Who better to do it? And to poke fun at my age, if history is any guide, is Ryan Newman. G'day, Ryan. How are you, buddy?
I'm great, thank you. Scott, how are you, mate?
I could, mate. I'm very well. I put that out there because I know this is kind of the way this works. I say something, you have laughing for being old, then we kind of get on with it. So if I get it out there up front, we should be able to do something with it. It won't surprise you to know, mate, our former colleague Andrew Page, who I still do the Motley Fool Money video with, we got a tweet about, we both of us talk about something old man style. And the tweeter said, "Oh, I'm surprised. Andrew looks only 40. He didn't mention me at all. Andrew and I are the same age. God damn it. Anyway, let's get back to the purpose of this video. And
you've stolen my punchline, Scott.
Oh, mate, you'll do it anyway. Let's be honest. I know what you like. Mate, let's go to a company. Speaking of old, here you go. Here's the segue. This is a business you're going to tell us about called Nitro Software. And for some reason, I don't know if it's because I grew up playing computer games where you had a Nitro button for the racing cars or what was going. It feels like a 1980s, 1990s kind of software gaming company. You know, should be making racing games or something with a name like Nitro Software. But I'm reliably assured, by no less than you, that it's not a computer game business. It's not a racing simulator. It's actually something a whole lot more productive. You see what I did there? What does Nitro Software do, Rhino? Remind me.
Definitely not a gaming company, Scott. It's a document productivity software company. Now, as I'm sure a lot of our listeners have probably experienced before in their own lives, a Docusign, that's basically become a verb now for signing documents online. Adobe also provides something similar. A good way to think about what Nitro Software does is basically a cheaper alternative to Docusign or Adobe. Okay. So if you've ever worked in an office, or if our listeners have ever worked in an office, or pretty much any work site for that matter, you'd be pretty familiar with the constant flow of documents. It's a never-ending flow.
So much for the paperless office, mate. It was supposed to happen 25 years ago when I was back in my early days of my career. There was supposed to be no more paper, and yet the photocopies and printers around corporate Australia continue to proliferate. Are you telling me finally we might have a solution?
Look, we might finally have a solution, Scotty. I think... it seems inevitable, right? You know, that these documents and the contracts that, you know, continue to go across the desk in paper form, it just seems so 2000 as opposed to 2021. But, you know, here's a good example. Imagine a real estate business, and I went through this with my wife a couple of years ago when we were signing the deed to this house. You know, it was constant back and forth, the real estate agent coming to our house, us traveling down to the real estate agent. I remember there was a I think we officially lodged the winning bid at about 9:30 p.m. one night and had to travel down to the real estate office at that time. Nowadays, you know, the more modern solution would simply be to email that contract across to us. We read it, we sign it, and send it back. But a lot of companies still aren't doing that, and that sort of highlights, I guess, the opportunity in front of companies like Nitro Software. And I mean, aside from the efficiencies that this sort of software can also produce and introduce to businesses, it's also an enormous paper waste, as you mentioned a minute ago. It's not very environmentally friendly. So Nitro Software, though, it really provides three different software products. The first is Nitro Pro, which is basically a desktop solution allowing users to quickly create, convert, edit, redact, sign, review PDF documents. And you know, we've all experienced PDF documents, which are PDF stands for portable document format. And you know, most often we just read them. We can make general highlights, this and that, through maybe a very basic Adobe solution. But companies want more options than that. They don't want to just have to read it. They want to create things. They want to edit things quickly rather than, you know, basically starting the process again. And that's the sort of thing that Nitro Pro can provide for. Nitro Cloud goes a step further, and it's basically web-based electronic signature. So essentially what Docusign and Adobe do. And then also Nitro Analytics, which provides customers with actionable insights or user adoption across various work streams. So imagine you send me a contract, Scott. It's a 10-page document, and I sign it immediately. From your end, you'd be able to tell this document was signed in 10 seconds. Indicates indicates I didn't actually read the document. So
Yeah, okay.
might want to follow up with that. Likewise, if there is a document for me to sign and you're waiting for that, rather than you following up on that, Nitro can do that for you. So basically to tell you, we're still waiting on this document. Should we send that person an email?
Nice, okay.
Just a couple more things. So Nitro does operate a land and expand business model. So as I said a minute ago, it does offer different solutions, different modules, also for different or different licenses and different seats, as you will, within a business. So companies can expand their usage of Nitro over time. And Nitro has had more than 12,000 business customers across 155 countries as at the most recent half. So it's quite a big business. Obviously a small fish when you compare it to someone like Docusign or Adobe, but a good and strong business in its own right.
I love that, man. There's so much I want to unpack out of those comments. You've done a fantastic job of summarizing the company. Let's go to land and expand first, because the phrase that we kind of throw around and we know what we mean, and most of our viewers will know what we mean, but some mightn't, or some might be new to the concept. Just quickly give us a thumbnail sketch. What is a land and expand strategy? Why is it useful? Why is it a good thing to see in a business that we might buy shares in?
Yeah, so land and expand, it's really broken down into two components. Land, so Nitro would land a customer. It would introduce its solutions into that business, maybe with a couple of different licenses or a couple of different seats. And over time, it expands its relationship with that customer. So by either offering them new solutions or increasing the number of seats within that business. And one of the reasons that is a really attractive model is that to land or to find a new customer altogether is quite an expensive process. But then through various teams like customer success teams within Docusign, within Nitro rather, they can actually spend less money, but spend more time with that customer. They've already landed them. They've done the hard work. Now expand their relationship and get more out of that customer over time.
Nice, I like it. And then, mate, you talked about, was it 12,000 businesses in 155 countries? I'm asking the obvious question. Maybe it's even the Dorothy Dix, or I'm leaving the witness here. But it is remarkable when you think about software companies. One thing they have that you can't do if you're not in the software space is Woolies can't open supermarkets in 155 countries easily. Very hard for a steel mill to produce and sell product in 155 countries. But if you have an online presence, you're doing something well through a combination of online marketing, word of mouth, advertising, all the stuff that goes with it. It's remarkable to imagine how long it might have taken a 1970s, 1980s company to get to 5 countries, let alone 155. It's a reminder about how quickly these guys can grow, because not only does scale work for you as you sign up more customers, in theory more of that goes to the bottom line, but just signing up the customers themselves is just an easier process. Now look, if you haven't got a customer success team or a sales rep in Rwanda, probably harder to grab that person necessarily, but if they're looking for a document software, signing software, and they happen to look for you, there's nothing stopping them signing up either. So it's a really, really nice way to think about software businesses, right?
Absolutely, it's a scalable operation, and as well, it's also a really attractive solution for, say, multinational businesses. So if there's a company with operations in both Australia, America, maybe Malawi, they can take on that solution and then roll it out across the business over time. So yeah, and that would be accounted for in that 155 countries as well.
Very cool, mate. Last one before we move on. I want to talk about the actual, let's go right back to the beginning, the very idea of electronic signatures. There are probably some people who haven't bought or sold a house recently, or a car, or even financed a mortgage. But and so maybe not as aware. I've got a couple of shelves full of papers behind me in previous houses and other contracts I've signed. But the very idea is it's taken, and COVID kind of accelerated this, right? It's taken the physical signing of a contract or any bit of paperwork and putting it online. Effectively, it takes some regulatory change as well. Governments and courts have to accept that the document has actually been signed and not forged. But that's also true with wet signatures, as they call them, literally physically signing something. But that change is really, really important, right? The ability to literally do that online on a computer screen, whether you're scribbling a signature, whether you're logging into an account, proving who you are. The move from physical to online, if you haven't been through that process before, is actually underway and is growing at a really decent rate of knots, right? So there is definitely a big, big move online. And so people who aren't necessarily doing that every day, maybe you don't even, last time I signed a house contract was 5 years ago. Before that, it was probably X number of years before that. So even if you don't do it regularly, the amount of content that is going online, when we're fortunate enough to have a share grant, for example, from the Motley Fool, we sign those things online as well. It's just a bigger and bigger bit of business, right?
It is, and really, I mean, this sort of solution can actually help with fraud prevention too. I mean, if I was to sign a document, physically sign a document, who's to say that it wasn't someone else that signed it for me? Yeah. Whereas with something like this, you can actually track the IP address of your computer, so the unique code behind the computer, the time it was signed as well. So it can actually start to narrow that down too. So yeah, there are security benefits to this as well.
I won't not to go on too much of a tangent, mate, but I do recall in the dim dark ages back in the day, mate. You won't know this, but there was a time when the travelers' checks were a thing, but also cab charge vouchers. If you got a taxi from somewhere to somewhere else on behalf of work, you had a little voucher you'd get from the receptionist or the admin assistant, and you'd write the amount on there and you sign it and you give it to the cabbie, and that's how they'd get their money back from the company. I know of more than one person who used to sign their cab charge dockets M Mouse, as in Mickey Mouse, kind of just because it was funny, because no one ever checked the signatures. And as you say, that kind of stuff, I could sign your name, you could sign my name. Any other sort of fraud could be going on. But if you have an IP address, you have a time and a date, you are, ironically, as much as, once upon a time, using credit cards online was considered bizarre, we've gone to the other point now where electronic signatures can be safer than actually doing it on paper. And I like that point as well. Mate, before we go into the pros and cons of investments specifically, which I know we're going to get to, and they're probably to deal with some of those things we already talked about, by the way. But before we get to that, there's been some recent share price movements, and we should touch on that. Docusign in the US, shares haven't had the best of recent history. It seems like Nitro is doing something similar. So, I won't get to the investment case just yet, but what's going on there, mate? Why have we seen those share prices fall?
Yeah, so Docusign, unfortunately for shareholders, the stock did fall about 40% one night, and that was
one night. I mean, wow.
And to be honest, it was actually off the back of what was probably quite a strong third quarter result. But I'll take a step back. Basically, Docusign had been flying, and the pandemic had really pulled forward a lot of demand. So obviously, people weren't able to travel as much, with social distancing and trying to prevent too much in-person contact. So the demand for online signatures was really booming. In the latest quarter, management basically said that the urgency of demand had materially slowed down and faster than they were expecting. I think they were expecting it to probably pull back to more normalized levels, but not as quickly as what they did. Okay. Revenue growth was still strong, but billings was significantly lower than anticipated. And billings is basically future revenue bookings. So what's to come in the near future. As I said, Docusign's stock plummeted more than 40% in a single session. Wow. And I think the market's probably put some of those negative expectations and sentiment onto Nitro as well. And to be honest, that's probably fair enough. As I said, they're similar businesses going after similar sort of customers. So I think there's probably, there's justification to sort of assume that it would be going through the same sort of thing. Fair enough. Also, Nitro also did conduct a fairly major capital raising. I don't believe they raised quite as much as they were hoping for. They were hoping for $140 million. I haven't checked exactly how much they did raise, but that obviously creates dilution effect for shareholders too.
Right, so there's a bit going on. Never let it be said the market can't get too excited in either direction. A 40% fall on a single day is, I don't know. I don't know how about that. That's effectively saying the future value of all profits of Docusign and half of what they were going to previously be in the market's minds, which is, I'm going to say impossible, or maybe I should say almost impossible, because we shouldn't use too many definite terms. As investors, we have got rules that require us to be a little bit circumspect in this sort of stuff. But either it was too expensive to start with, maybe it's too cheap now, maybe somewhere in between. But a reminder: the market isn't always efficient, or at least not always thoughtful in the way it responds. But let's get back to Nitro, mate, because Docusign is, as you say, the big gorilla. It is the dominant global player based in the US. Let's go to Nitro's investment case specifically. I imagine there's some overlap, by the way, there. But if you're going to recommend an investment, if you were going to recommend an investment in Nitro, what case would you put forward, mate, as to why the shares would be worth buying?
I'll break that down into short-term and then long-term. As our listeners will know, we're long-term investors here. Mm-hmm. Short-term, why this could be a little bit different than Docusign's situation. Nitro is a significantly smaller fish than what Docusign is, so there is a chance that it may not feel the drop as significantly as Docusign did. Docusign's would be in the realms of millions of dollars, whereas Nitro's may not be impacted quite as heavily as that. And the third quarter for Nitro was still quite strong. In the long term, I think, I mean, I think I used this word before, inevitable. The shift towards these sort of digital solutions and away from paper waste and those contracts coming across the desk, I think is inevitable. Sure, throughout the pandemic, demand has been pulled forward, which probably has, I guess, reduced some of that demand pressure from the next couple of years. But I think in the long term, this is still a really, in my mind, a safe bet that, whether or not for Nitro, but as the industry as a whole, I think is a really positive outlook for the industry. So, and I do think that Nitro can probably benefit from that. I also mentioned a minute ago the pullback in Docusign's share price. Nitro is also trading at about a 45 or 50% discount compared to its 52-week high. As I said, I think probably that some of that is justified. The valuation was stretched, and there is more uncertainty now. But it's now trading at about 11 times forward sales, or at least the forward sales that management forecast just a couple of months ago. So I do think that is quite a compelling price. I also think it's not really necessarily a winner takes all market. As I said, the opportunity is humongous, and for cheaper solutions in particular, I think Nitro could benefit from that.
Nice, mate. I like that very much. It's a reminder, as you say, that markets can do what they do, and as I say, the outlook's maybe not more uncertain than it was. It always wasn't certain. We just didn't know it at the time, and that can be part of the concern, right? When investors are feeling confident, when the tide's all the way in, everyone's feeling good, except you've got to be careful, because if the tide starts to go out, it can hurt you. Of course, over the long term, we know plenty of business. Even Warren Buffett's Berkshire Hathaway, which I own shares, has fallen 50% top to bottom at least 3 times in the last couple of decades. Now, if an industrial conglomerate, the most boring business in the world, I think is probably pretty close. If they can fall that much, I don't know how often the likes of Apple or Amazon, I own Amazon shares too, they must have fallen a lot, by that sort of amount. So just because things fall doesn't necessarily mean that they're bad. Just because they fall doesn't necessarily even mean they can bounce back. It can be either or both. But a reminder not to just look at the past performance. That being said, let's go to those cons, mate. If you're going to talk me out of an investment, I've said, Rhino, I'm about to go and buy Nitro. He's like, just consider these things first. Or maybe sell your shares because this mightn't work out. If you're going to be the bear on Nitro, what case would you make, mate?
Look, I think the competition probably is a threat here, and probably one of the bigger risks facing Nitro. So I mentioned that Nitro is basically seen as the cheaper alternative to Docusign or Adobe. That can change, and that's not necessarily something that's in Nitro's control. If Docusign or Adobe begin to think that, we need to start selling more product, we need to get volumes up, let's lower the price. That will impact on Nitro's advantage in that sense. And that, as I said, that is outside Nitro's control, and generally those are sort of the risks that we need to be more mindful of, that it's not an execution thing. If someone else wants to do this, they can. Change of strategy. So I think that probably is one of the big risks. And then I guess depending on your time horizon as well, there is that slowing growth element. So I don't know if they're going to face the same threat or short-term threat as what Docusign has, but there is that very real possibility. And if you're investing for a shorter period of time, then that certainly should play into your thinking as well.
And probably fair to say too, mate, the valuation, 11 times sales, 11 times sales for a business growing really fast for the next few years, maybe a different valuation consideration of a business at 11 times sales that grows slowly or goes backwards even for a couple of years while it soaks up that demand it pulled forward. The longer you have to wait for your dollars, as always, the less valuable they are. The old time value of money. If you ask, give me $1 today, I'd rather. If you promise me $1 in 100 years' time, I'm probably not so keen. So sooner is obviously better than later, and that has to play into it as well. May wrap it up for us, though. We've talked about the pros, we've talked about the cons. You've done a great summary of the business. You haven't bagged me about my age, so I'm happy about that. Let's go to the bottom line, mate. If I said to you, okay, between now, we're recording this, by the way, at the very, very end of 2021. So let's go out 5 years. Let's go to New Year's Eve 2026. Looking back, do you reckon Nitro is a market beater from here, or does it lag the market, do you reckon, over the next 5 years?
Yeah, look, Scott, I think it probably is market beating. I tend to think that it is. I think the opportunity is significant in front of Nitro, and obviously there's others chasing behind in this market as well, so DocuSign and Adobe. But it's not a winner-takes-all market in my mind. The opportunity is huge, and I think Nitro can probably capture some of that. I think there is possibly also potential for a takeover offer at some stage. I don't like to speculate on that too much, and I certainly wouldn't be making my investment thesis around that. That's not my style, but I think that is a possibility down the track.
You're right, mate. Speculating on a takeover is not great investing, not a great approach, but it's a nice cherry on top, right? If it's possible, if it happens, then it's great. Yeah, actually, you shouldn't base an investment only on the takeover potential for a company, because we've seen plenty that have been possible, probable, even offered, and then fallen over. It's a risky game to try and play, but it's right to highlight it. Mate, thank you for spending some time with us on this Stocks in Focus video. Thank you for sharing your expertise with our viewers. By the way, this is going live on Christmas Eve, the 24th of December. So, to all the Phils who are watching this right now, or on Christmas Day or Boxing Day, if you want to do that, if that's what you want to do with your holiday, we heartily endorse that. But from us to you, and Ryan, thank you. But from us to you, Merry Christmas, have a great New Year, and full on.